Good morning, everyone, and thank you for choosing Market Briefing analysis of today's financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial news, June 28, 2023. European stocks opened on a positive note today, extending their rebound from a 6-day losing streak. The Stoxx Europe 600 index gained as much as 0.5%, showing signs of recovery after the recent downturn. One notable gainer in the European market was UBS Group AG, which advanced as the company announced plans to cut more than half of Credit Suisse Group AG's workforce. This move by UBS Group AG is expected to have a significant impact on the banking sector. However, the positive sentiment in Europe did not translate into gains for U.S. equity futures. Reports of new curbs on artificial intelligence, AI, chip sales to China put pressure on Nasdaq futures. A Wall Street Journal report indicated that Washington is considering restrictions on chips made by NVIDIA Corporation and other companies, causing shares of NVIDIA and Advanced Micro Devices Incorporated to drop in after-hours New York trading. As a result, Nasdaq futures were down about 0.3%. The focus now shifts to a central banking forum in Portugal, where several influential policymakers are scheduled to speak. Among the notable speakers are Christine Lagarde from the European Central Bank, ECB, Jerome Powell from the Federal Reserve, Kazuo Ueda from the Bank of Japan, and Andrew Bailey from the Bank of England. Investors are eagerly awaiting any insights or hints about future monetary policy decisions that may emerge from these speeches. In terms of bond markets, Treasury yields were generally lower. However, the resilient U.S. economic data has reinforced expectations of further tightening in monetary policy by the Federal Reserve. ECB President Christine Lagarde and other policymakers have also emphasized the ECB's commitment to raising interest rates, further contributing to the current market volatility. The ongoing economic concerns in China are also affecting market sentiment. Recent data showed a drop in industrial firm profits, adding to a series of weak economic indicators. Investors are closely monitoring the situation, particularly the potential impact of additional U.S. curbs on technology sales to China. Analysts believe that these restrictions may slow down AI developments by Chinese firms. However, some experts argue that Chinese AI firms could still source dedicated AI chips from third-party countries, making it difficult for the U.S. to enforce the regulations effectively. Looking ahead, market participants are anticipating the release of the results of the Fed's annual stress test of the banking industry. Analysts generally expect the banks to perform well in the tests, despite ongoing discussions about implementing more stringent requirements following recent collapses in the financial industry. In summary, European markets are showing signs of recovery after a losing streak, while U.S. equity futures face pressure due to potential curbs on AI chip sales to China. The Central Banking Forum in Portugal and the upcoming stress test results from the Fed are among the key events that investors are closely monitoring. Before we continue with our analysis, we'd like to remind you of your support for our channel Market Briefing analysis of today's financial news. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, let's get back to the financial market news and the latest updates. Some of the main moves in markets. In today's financial news, major U.S. indexes experienced a rebound in a tech-driven rally, breaking their multi-day losing streaks. European markets also traded higher, with the Pan-European Stoxx 600 breaking its 6-day losing streak. Wise, a fintech company, reported impressive income growth of 73% year-on-year, contributing to the positive sentiment. However, despite the recent market rebound, recession warnings have been making headlines. HSBC Asset Management predicts that the U.S. will slip into a recession in the fourth quarter of this year, with the Eurozone expected to follow suit in 2024. The silver lining in this forecast is the anticipation of a quick fall in inflation, leading HSBC to expect rate cuts by the Federal Reserve by the end of the year. European Central Bank President Christine Lagarde highlighted concerns about inflation in the Eurozone, stating that it is still too high and is set to remain so for too long. In May, headline inflation for the region was 6.1%, 3 times higher than the ECB's target of 2%. Lagarde emphasized that the ECB is unlikely to pause or cut rates anytime soon. Meanwhile, Unity shares experienced a significant surge of over 15% following the launch of an AI marketplace. Unity, known for its game engine, introduced a platform where users can access AI software from other companies for various purposes such as graphics, text, and voice generation. AI's transformative power was also emphasized by Dan Ives, managing director of Wedbush Securities, who referred to it as the fourth industrial revolution playing out. Ives believes that AI will revolutionize our lives and work, and it is already driving a new tech bull market. This sentiment was reflected in the market response, with Unity's share price experiencing a notable increase. Amidst the recession predictions, recent economic data from the U.S. presents a more resilient picture. Consumer confidence rose higher than expected, reaching the highest level since January 2022. The proportion of respondents expecting a recession declined, although it remains relatively high. Additionally, the housing market showed surprising strength, with new home sales and home prices outperforming economists' expectations. Demand for durable goods also accelerated, indicating that the U.S. consumer is not yet faltering under higher interest rates and economic uncertainties. As Wolfe Research's chief investment strategist Chris Sinayak suggests, the strength of the U.S. consumer may be a crucial factor in determining the economic outlook. If consumers continue to exhibit resilience, it could potentially help the U.S. economy withstand the looming recession predictions, despite the chorus of voices foretelling an economic downturn. While recession warnings persist, recent economic data and consumer confidence challenge these predictions. The market rebound, resilient consumer sentiment, and positive indicators in housing and durable goods suggest that the U.S. economy may defy expectations and navigate through the uncertain economic landscape. Stocks. S&P 500 futures fell 0.2% as of 3:26 a.m. New York time. Nasdaq 100 futures fell 0.3%. Futures on the Dow Jones Industrial Average were little changed. The Stoxx Europe 600 rose 0.5%. The MSCI World Index rose 0.2%. Currencies. The Bloomberg Dollar Spot Index rose 0.2%. The euro was little changed at $1.0951. The British pound fell 0.1% to $1.2735. The Japanese yen was little changed at 144.05 per dollar. The offshore yuan fell 0.3% to 7.2444 per dollar. Cryptocurrencies. Bitcoin fell 1% to $30,346.25. Ether fell 1.6% to $1,863.13. Bonds. The yield on 10-year treasuries was little changed at 3.76%. Germany's 10-year yield was little changed at 2.36%. Britain's 10-year yield was little changed at 4.38%. Commodities. West Texas Intermediate crude rose 0.2% to $67.83 a barrel. Gold futures fell 0.2% to $1,919.50 an ounce. In conclusion, we'd like to thank you for watching Market Briefing analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more fascinating news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.